Hey, what's up, everyone? It's Raman, your personalized CFO. I made this quick presentation to talk a little bit about cash flow planning. Um, Cash flow is super important when it comes to our finances, and I've met a lot of people in my life that I've done financial plans for, where they're making a lot of money and they have no clue how to create those boundaries. So hopefully this quick presentation will allow you to get some sort of tips and strategies on that you can start implementing in your life on an ongoing basis, and be better at your cash flow. So remember, give your money a job, and let's go ahead and start treating your personal finances like it's a business. So the first thing we want to take a look at is we need to start considering optimizing our cash flow. When it comes to optimizing our cash flow, number one, we have to redefine how we look at our current cash flow, right? Understand that this money that's coming in, what is this money, and what's its purpose for us, right? Number two, we want to go ahead and evolve our current banking structure in some cases, making sure giving our money a job, as I mentioned earlier, right? Number three, we want to start looking at our savings, the money that we save, whether it's for retirement or buying a car or buying a house, whatever our future goals are, that savings is also considered an expense from our cash flow, right? Number four, we want to look at is we want to assign target goals for our target savings. If we know we want to buy a car in the next 12 months or 24 months, what is the down payment that we need for our car? What is the total amount that we need to set aside for a car? Same goes for our houses. Same goes for saving money for our children, for our education savings, and all the way out to retirement. Next, we want to make sure we automate our savings and our spending and our expenses, and make sure that we make them recurring. So we create a habit out of that, right? The most powerful habit is automation, and that will help you make bigger changes in your life long term. And for those who are good at managing their debt, we're going to talk about maximizing credit card points. So redefining our cash flow. So what does that mean? Number one, we want to think about our personal finances like we're running a business. So think about a business whenever they receive their revenue that comes in, their gross income that comes in, right? Then they have expenses to pay, right? They got to pay their real estate expenses, whether it's a rent or whether it's owning the building. They got to pay their utilities bills. They got to pay their employees. They got to pay all those expenses, and it comes down to net income, right? So that's how we want to look at our personal expenses. Is like we're running a business. The income that we receive from our business, think of it that as like that's our employees, that's our minions, as I say it, right? It's our income is our minions that we're going to deploy to go towards our expenses. Remember, everything is an expense in our life, even our savings. We have to designate our each employee, the income that we receive, their responsibility. What's the money for, right? If I have this much money coming in, which I'll give you an example in just a second, how much of that money is going towards taxes? How much is that going towards 401k? How much is that going towards our rent, our mortgage, our utilities, and our savings, whether it's for retirement, education, vacation, whatever our future goals are? Basically, at the end of the day, we got to have a plan for that money. So if we look at an example, let's just say this individual makes a gross income every 2 weeks of $88,000 every 2 weeks, right? $8,000 is my gross revenue, or you can even say like these are my employees working for me, right? Then we take out our some of our expenses right from the get-go, right? Our FICA tax, our FUTA tax, Medicare tax, sales tax, state tax, local tax, employer paid benefits or employee owned benefits, retirement contributions. So all those things get taken out of our pay stub, and that takes us to our net paycheck. Let's just say every 2 weeks of hypothetically speaking, $5,500, right? This $5,500, we're going to create a defined responsibility of this income and make sure we have a plan for it. Then we go on to our step two is evolving our banking structure. So in this case, we have that $5,500 going into our checking account and our checking account, for example, right? The way we want to break down our expenses is we have our current living expenses, which is, our rent, our mortgage, our utilities, our car costs, our food and groceries, our miscellaneous spending, our credit card spending, all those living expenses. And then we have our future living expenses as well. What does that mean? That's our savings goals. So for example, hey, we're planning out our vacation to go to France next year, or we're planning on buying a house in the next 3 years, right? Or we're planning on doing a birthday vacation to Prague this coming up year, our emergency savings, and then our investment savings, which could be education savings for our children, or it could be to buy a real estate down the road 5 years from now, or wanting to have set aside money for retirement, basically our long-term savings. Guess what? Anything that's tomorrow and beyond, that's our future living expense. And anything that's today, basically this month or this year, that is our current living expenses, right? So understanding that the money that's coming in, it's either paying our current living expenses or it's going to pay for our future living expenses. And that's how we want to evolve our banking structure out of the way. So what we want to do is we want to go ahead and automate our spending and our savings. So that $5,500 that goes into our checking account, right? We want to make sure that our future living expenses that we set aside, for example, $500 on the 18th in our discretionary spending savings, which is like, vacation savings and things like that. You automate that amount, or $500 a month on the second of every month for emergency savings. So it keeps automatically depositing that amount on an ongoing basis. Or you can even set aside two type of deposits. So for example, 250 on the 18th and 250 on the second of every month towards your investment savings, right? The whole idea is to automate these savings out of that account, the money that gets deposited into your paycheck on every 2 weeks basis. Matter of fact, I've had some clients, even myself at one point, I was making 2 mortgage payments a month, basically, right? Which helps a lot in the long run from saving interest on our mortgage. Moving forward, we want to go ahead and talk a little bit about maximizing credit card points. So, for example, for those who love to use credit cards, the easiest way to maximize your points is your current living expenses that you have. You can have one credit card that goes out and pays your recurring monthly expenses. So think of like your utilities bill, your car insurance, your Netflix membership, even rent if you can pay for it. You go ahead and pay that on your one credit card. So that credit card is automatically, that every month it's going to be about $3,200 a month towards that credit card. So you could pay that credit card off either every 2 weeks or at the before the end of the billing cycle. And then you want to have a second credit card, which is for discretionary spending, meaning, Amazon shopping or going out and eating and things like that. So you can monitor your discretionary shopping in a separate credit card. And the goal is that every time you get paid, you want to make sure all your bills are deployed, all your savings are deployed, and make sure your credit cards are paid off on an ongoing basis. In summary, make sure, number one, you treat your personal finances like it's a business. How do you do that? You give your money a job. Once you give your money a job, you can actually redefine your cash flow. How does your cash flow work and how it should be working? Then number four, you want to evolve your banking structure to make sure that it's aligned to your goals, aligned to your needs, and you're assigning your money a job. Remember, savings for the future is also an expense for today. So whatever you're saving for tomorrow, it's literally an expense. And if you don't pay that expense today, it's going to cost you in the future, basically, right? And this is the only expense that actually takes care of you down the road and in the future, whether it's your next vacation, you're buying your next home, your next car, whether it's education savings for your children, or even as much as going towards retirement. Create target goals for your target savings. I personally utilize a cash flow planning software for my clients where we create these target goals for your target savings, and we monitor those very frequently. So make sure you have a process around that. And you want to make sure you automate your spending and your savings. If you have everything automated, you know that how much money is going into your account on an ongoing basis. You know how much is going out on an ongoing basis. So at the end of the day, I have an extra $150 or $1,000 to spend on anything else that I feel like I was spending on. If you know that, my expenses are $5,000 a month and I'm setting aside another $2,000 a month towards my savings, which is also an expense, that means $7,000 a month is already allocated towards your expenses. And if you're making $8,000 a month after taxes, then you have an extra $1,000 per month to do whatever you want to do with that money. Whether you go ahead and buy yourself a next, Adidas Sambas, like my girlfriend wants them, or all the way out to, going to Vegas, making a spontaneous trip to Vegas if you want to, right? Or just setting that money aside in additional savings. And last but not least, work with a financial coach if you can, or hey, your personalized CFO right over here, Raman. But at the end of the day, remember, give your money a job. Stay focused, stay disciplined. And remember, your current savings is basically also an expense, and that's an expense that's going to take care of you down the road. If you have any questions, I do offer a 15 to 30 minute complimentary session that I can answer any of your questions. Feel free to follow me, ask me any questions, and I'm happy to help. Once again, this is Raman, your personalized CFO at Sync PWM.